Is Bitcoin Cash about to crash again? Today's analysis, we're taking a look at Bitcoin Cash on the weekly time frame, and the chart is sending a very important message. The first thing that stands out is the long-term ascending trend line, which had been acting as strong support for quite a while. Price respected this trend line multiple times, but now we've seen a clear breakdown below it. That's a significant bearish signal because it tells us buyers have lost control of this long-term structure. The second key point is the support zone around $280 to $300. This area acted as support several times in the past. However, the latest weekly candle has broken decisively below this zone, turning it from support into potential resistance. In technical analysis, this is known as a support to resistance flip, and it's usually a sign that the market sentiment has shifted to the downside. Right now, Bitcoin Cash is trading around $200, which means it's sitting below both the trend line and the previous support. As long as price remains under these levels, the overall trend stays bearish. Now, let's talk about what could happen next. In the bearish scenario, if sellers continue to dominate, we could see the price searching for the next major support level. Since there isn't much historical support immediately below the current price, volatility could increase, and further downside remains possible. On the other hand, if buyers want to regain control, the first challenge is reclaiming the $280 to $300 zone. But simply touching that level isn't enough. We need to see a strong weekly close above it, followed by confirmation with higher highs and higher lows. Without that confirmation, any bounce should be treated as a potential dead cat bounce rather than the start of a new uptrend. Looking at the bigger picture, there's also a major resistance zone between $620 and $740. This area rejected price multiple times in the past, making it a strong supply zone. Even if Bitcoin Cash starts recovering, that region is likely to attract heavy selling pressure again. So to summarize, the long-term uptrend has been broken. Weekly support around $280 to $300 has failed. The market structure is currently bearish. Bulls need to reclaim that support zone before we can start talking about a trend reversal. As always, remember that technical analysis is about probabilities, not guarantees. Always manage your risk, use proper position sizing, and never rely on a single chart before making trading decisions. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and I'll see you in the next market update.